Hello and welcome back to News You Can Use with the TF Team podcast, Between Dollars and Dreams. I'm, of course, joined again with Pierre Tomachek. And this week we're going over the news that's happened here in Canada and around the world that affects our viewers here in Ontario. So some of the changes, I guess, that have happened are mortgage rates. They've gone up recently. And this is going to affect people that are renewing. So people that have locked in, let's say 5 years ago at a certain rate, are maybe in for a bit of a shock. Is that what we're sort of hearing here?
Yeah, so it's not as bad as a shock, but there you could expect on average, about a 6% increase. So that could be significant to someone right now that is living on the edge, that they're stretched. This is the most that they could pay in terms of their mortgage payments. And then now at renewal, their mortgage payment is going to increase. Their property taxes are going to increase. Their insurance costs on the home is also going to increase. So it could be significant for some. The good blessing is that, hopefully 5 years ago, when they did the mortgage stress test to figure out should mortgage rates increase by 2%, would you still be able to afford the home? They should have taken that into consideration. So I'm hoping that most people should be okay because we're not looking at a 25% or 50% increase. So they're saying on average 6%.
Okay. So it's still going to be a little bit harder for some homes. Some people might be stretched a little thinner. Of course, this brings back, of course, the planning.
Exactly. The emergency fund, right? Exactly.
So have that little extra fund, hopefully, that you can dig into if you do need it. And if you don't have that, we should start talking to a financial planner to get that plan up and operational. So with this, drop in interest rate prices, we've also seen drops in home prices.
Oh, yeah.
Certainly condo prices in the city. And this brings us up to our next story. So it seems like there's a lot of pre-construction people that bought pre-construction condos and their values are dropping. So now they're having some trouble with their mortgages. Can you explain how that works?
Yeah, definitely. I mean, it used to be, you bought a brand new home, like a pre-construction, condo. You bought it, let's say, for $400,000. And then by the time that you took possession, because it'll take about a year or two to build the condo, the price of the home would have went up, right, to about $600,000, right? So everyone has always been banking, always buy real estate. It never goes down, right? So now the opposite has occurred, whereby you've bought this pre-construction condo for $500,000, and then by the time you're ready to move in, you're ready to, sign on the dotted line, the price has actually gone down to $400,000, but you're locked in at $500,000 because this is what you signed for. But the value of the home has gone down to $400,000. So now when you go to the bank to get a mortgage, they're not going to give you a mortgage based on the $500,000 value. They're going to give you a mortgage based on the new value that has gone down $400,000.
Oh, wow.
So now you've got to come up with an extra $100,000 as you banked for that.
Yeah, most people, of course, wouldn't. So even if you were pre-approved for that mortgage and you thought you signed on that dotted line, when it comes to actually closing, you could still be on the hook.
Exactly.
For whatever the difference is.
Yeah, so you bring up a good point. Pre-approved just basically says that you've been pre-approved for a certain amount based on certain conditions. It's not a binding contract, right? Okay. It's not binding. When you're ready to purchase the home, that's when, so typically within a month or so, this is when you get the actual mortgage. And this is where the price and everything else, it will be determined. So you were pre-approved for $500,000, which is great. Now the price of the home has gone down to $400,000. The condo property owners, they didn't lower the price. You're still bound to pay them $500,000. But now the bank knows that this $500,000 home is not worth $500,000. It's only worth $400,000. Wow. So as a result of that, they're not going to lend you a mortgage or provide you with a mortgage based on a $500,000 price. They're going to do it based on a $400,000 price. Wow. And you've already signed on the dotted line that you're going to buy this $500,000 home. So now you're on the hook. Mm-hmm. And guess what we're seeing? If you're not able to close, there goes your down payment that you've provided. So all of your savings, you save, let's say 20% down or 5% down, let it be anywhere between $25,000 to $100,000, out the window. Mm-hmm. It goes to the property owners, the condo owners.
And you also brought up an interesting point at the beginning of this, where you mentioned sort of the people that are, I guess, hoping to sort of flip the property, where they buy it at a certain value, expecting that by the time it closes, it goes up. So those people, in a way, probably feel burnt even more.
Exactly.
Because not only have they lost the value in their property, but they've lost any possible...
Exactly. So those days of flipping. So here's what he's talking about. So if you look at the big downtown condos in Liberty Village, right? So this is a, blossoming area. So people will buy a condo for phase one of Liberty Village. So they bought it, I'm just going to make it up, $300,000. So it's going to take about a couple of years before the condo is actually built. So by the time the condo is being built, that $300,000 house is now worth $500,000. So now, before I could even move into it, I'm going to sell the condo.
Right.
I'm going to sell it to a new owner. I haven't even moved in. The condo is not even finished. I bought it for $3,000, and I'm going to flip it and sell it for the new price at $500,000. I just made $200,000 minus other fees as a profit. So people thought that party was going to continue. Unfortunately, the party is over. It's actually, prices are actually going down.
Which, again, is good news if you're just getting into the market. I know we do have a webinar coming up later this month, which we'll touch on again. But we have another bit of news, I guess. The banks have reported their profits this week, or this last week, I should say.
Last week, yeah.
And Scotia was the first to announce their profits. And my goodness, they're doing just fine, aren't they?
They're richer than you think, I tell you. They are richer than you think. So at $2.3 billion, I think it's up from almost $1 billion. I think it's $993 million that they're up. So my saying, if you can't beat them, join them. So just buy their stock. So how would you buy their stock? Well, if you don't have a brokerage account and you don't want to do your own investing, then we always provide dividend funds, right? And the dividend funds purchases the big five banks. So you would have an exposure to Scotia, and you would be diversified. So it's not putting all your eggs in the Scotia basket.
Okay, well, that's good news for people. They should definitely check out that fund. We also have other news in the market. Of course, gold has climbed back up above 5,000 for the first time in, I think, 3 weeks. So what does that sort of indicate?
That indicates that we've got turmoil in the rest of the world and also in our shores. So whenever the world is in turmoil or goes to hell in a handbasket, people gravitate to safe havens. And safe havens is typically commodities like precious metals, gold, silver, zinc, and copper. So there's so much wars that are going all over the world. You name a location, right? There's probably an issue surrounding there. So what has happened is that the price of that commodity has actually gone up. So what could we do? Well, don't panic, right? It's investments. It doesn't go straight up and it doesn't go straight down. So having the plan to be diversified and weather all those storms. So this is what we would tell everybody to do. There will be some ups and downs, but be prepared. Okay, so always have that plan to be able to weather that storm. Again, if there's one thing we can always stress, it's planning, planning, planning. And I guess the second thing would be that emergency fund. Yeah, exactly.
But I think that's all our news for today. For all of you out there, thank you for joining us. Again, this is the TF team, Between Dollars and Dreams, news you can use. Take care, have a great day, and please do join us for the webinar that we have coming up at the end of March. You can find more information at the link below. We'd love to hear your thoughts and feedback. And please do leave us your comments. We'd love to hear from our audience. Thanks again. Take care. Have a great day. Bye for now.